So next module, financial institution. Just write one line there. These are institutions or companies. These are institutions or companies that mediate between ultimate lenders and borrowers. Ultimate lenders and borrowers. These are also called financial intermediaries. These are also called financial intermediaries. Okay, so financial institutions are nothing but the intermediaries. FI, financial intermediaries. So what they do? These are institutions that mediate between ultimate lenders and borrowers. So who are the ultimate lenders? Tell me. Who are the ultimate lenders? Those who save are the lenders, right? So who save? Households, right? So households, they save. Okay, so the job of financial institution is basically to mobilize money from the households. So the savings will be mobilized and will be lending to who's the borrower? Who's the borrower? Lending to the firms, right? For the investment. So the savings of the households will be mobilized, okay, mobilized, and will be lending to the firms for investment. So financial institution is nothing but the intermediary. So the main job of financial institution, if you ask me, it is nothing but promotion of capital formation. Capital formation means what? What is capital formation? Capital formation is nothing but the investment only. So the main role of financial institution is basically to promote investment by acting as intermediary between households and the firms. Okay, so they mobilize the savings of the households or public for the investment of the firms. Now, what are the different types of financial institution? So financial institutions, the main three types are banks. Banking we have discussed. Banks we are yet to discuss. The types of banks, etc. That has to be discussed here. Then DFIs. I have told you to somebody yesterday that we will be discussing about this in the next session. So banks. DFIs means what? What do you mean by DFI? DFI are Development Financial Institution. Development Financial Institution. Yesterday I have told you NABARD we have discussed, right? For example, NABARD. Okay. Then SIDBI. Okay. And Mudra Bank. We have discussed this also. Mudra Bank also I have told you yesterday. So not yesterday, day before yesterday. Then one more. What is that?
National Housing Board.
Yeah, okay. I'm talking about financial institution. Financial institution. Banks covered, DFIs covered. Now the NBFCs. Okay, or non-banking financial institutions. It could be non-banking financial companies or non-banking financial institutions. So here we will be discussing a lot of, see, when we discuss about banks, what are the main three types of banks? There are three types of banks. We will discuss these three types in detail. The main types are commercial bank. Okay, how many of you are working in bank here? Who's working in bank? Ritika, you are working in bank, right? RBI. Okay, so commercial bank, cooperative bank, and regional rural bank. Okay, so these are the three main types of banks. So now I'm not talking about the recent new types that we have already discussed last day, that is payment banks, small financial bank, etc. That is called differentiated banks. So they are not exactly banks which I am talking about here. Here I am talking about this three category of banks. Okay. So yesterday in the previous session we discussed about small finance bank, different payment banks. Those are differentiated banks. So they are not exactly banks which comes under this category. So banks means mainly these three types: DFIs, NBFC. So there are some commonality in the banks and there are some commonality in the DFIs. But when we discuss about NBFCs, so many NBFCs are there and there is no commonality among them. For example, mutual fund is one NBFC, insurance company is one NBFC. Okay, so you got it. So different types are coming under NBFC. So venture capitals, okay, and all this Islamic banking, all these will come under this part. So we will discuss under NBFCs. Or in another way of classification is this: the financial institutions, you can make a twofold classification: banks and non-banks. Okay, so under non-banks you can write DFIs and NBFC. So some textbooks may tell you this also, but we don't want to go with this is fine. There are three different types: banks, DFIs, NBFCs, for your better understanding. So otherwise banks and non-banks, these two are considered as non-banks. So why these two are considered as non-banks? Then what is the speciality of banks? Banks have to perform three important functions. So any financial institution we can call as banks if it performs three functions. Any idea what are the three functions? Can anyone tell me what are the three functions which has to be performed by an institution to be called or qualified as bank? Three functions has to be performed. No idea? Yeah, firstly deposits, right? Acceptance of deposits. So acceptance of deposit from the public, you write there in your notes. Not just like this, write it properly. Banks are the financial institutions which perform the following three functions. First one, acceptance of deposits from the public. Second one, lending. Right? Lending means loans, giving loans. Third one, provision for demand withdrawal facility. Demand withdrawal facility. Okay, so provision for demand withdrawal facility. Okay, see, when we talk about this Muthoot Finance, etc., they take deposit, they can lend money also. Then what is the problem? Why we are not considering them as banks? There is no demand withdrawal facility, right? Similarly, when we talk about post office banks, okay, why post office banks are not coming under the category of banks? There is deposit, there is demand withdrawal facility also, but there is no lending. You got it? So any financial institution which satisfy these three conditions or which perform these three functions are what you call as banks. Are we okay? Shivangi, are you there?
Yes, sir.
Okay. So, okay, now classification of banks. Next heading you write classification of banks. So mainly scheduled banks and non-scheduled banks. Okay, so under scheduled banks you can write scheduled banks. These banks are registered under second schedule of RBI Act 1934. RBI Act 1934. Scheduled banks. These are registered under. These banks are registered under the second schedule of RBI Act 1934. Now there are conditions. Okay, you can write the conditions. At that time, paid up capital of the bank should be at least 5 crore. Paid up capital of the bank should be at least 5 crore. Its operation should be conducted in the interest of its depositors. Its operation should be conducted in the interest of its depositors. So if you see all major banks like commercial banks, okay, we have just discussed about this three, right? This commercial banks, cooperative banks, regional rural banks, all are what? All are actually scheduled banks. And one more advantage is these banks can directly borrow from RBI. Okay, those scheduled banks can directly borrow from RBI in case of any exigency or any requirements. So all major banks are actually scheduled banks. Now, commercial banks, if you see, what are the commercial banks? Commercial banks are three types. So firstly, public sector banks like SBI, PNB, etc. So these are commercial banks, right? Then some private banks. So public sector banks is there, private banks, ICICI, HDFC, etc. Foreign banks, HSBC, Citibank, Yes Bank, etc. Okay, so these are the different types of commercial banks. Now, scheduled bank and non-scheduled bank, what is the difference? Scheduled banks are registered under RBI Act, and those which are not registered under RBI Act is non-scheduled bank. So you cannot borrow from RBI. Although RBI will regulate, there is no such borrowing or anything. Okay, so no advantages that the scheduled banks will get from RBI will be available for non-scheduled banks. Now, what I can do is I can make a table or column between commercial banks and cooperative banks, so that it will be easy for you to understand. So on one side, commercial banks, and the other side, cooperative banks. Okay, so under commercial banks you write registered under Companies Act 2013. Companies Act 2013. Earlier it was 1956, Companies Act 1956. When it was amended, it was 2013. Okay, so Companies Act 2013. What about cooperative bank? Under Cooperative Societies Act of State Government. Under Cooperative Societies Act of State Government. So this is under the state government. Okay, so there are two types of cooperative banks, or when we discuss about cooperative credit society. So it is actually the cooperative banks will come under cooperative credit society. Okay, so it can be the cooperative credit society is like this: credit, okay, and then non-credit. So here this is for agriculture, non-credit area, this is for agriculture and such kind of things. This credit part, this is what we generally consider as bank. So when we say cooperative bank, this part is what we are talking about. So you don't want to discuss about this part. Okay, so the credit cooperatives, that is the banks. So what about the management here? In the commercial banks, the management is actually by board of directors. Board of directors. So you can write managed by board of directors. I'll discuss about, I've told you before also in the previous session, we will discuss about this Companies Act in detail when we discuss about industry. So there I'll tell you what you mean by board of directors and what are the rules with respect to board of directors, etc. On the other side, here you can write management. Management, you know that it is representation of people, right? Representation of people, representation of members. So one member, one vote. Now any person can be a member. Only requirement is you just need to open an account, right? So requirement is you can write open account. So the public actually appoint the management here. Okay, so it is on democratic line. Democratic line. Public appoint the management. So any member can actually see, you need to be first member. For that you need to open an account, and any member can contest the election and can contest for chairmanship, right? So if you get elected, you can be the chairman. Now, if you come with the objective, what is the objective of commercial banks? What is the objective of commercial banks? Profit. So objective of commercial bank is actually profit. What about objective of cooperative banks? Main objective is not profit, it is financial inclusion. So you can write under objective profit here, and here it is financial inclusion. Now who's the regulator? Regulator in commercial banks? Who's regulating the commercial banks? RBI. So you write regulator and then write it RBI. What about cooperative banks? Actually, three institutions. RBI obviously will be there. Okay. Then NABARD will be there, and then state government will be there. Okay. So the deposit and lending related aspects etc. will be taken care or regulated by RBI. Lending to agriculture sector, that is by NABARD. Okay, so that is actually after the establishment of NABARD, RBI deregulated that area. So now NABARD will be taking care of that. So here we have this one, representation of members. So management we have discussed, objective we have discussed, regulator we have discussed. What else to discuss? Now what about value added services? It will be more here, more value added services. Value added services means checkbook, ATMs, internet banking, etc. Okay, so that will be more here, that will be limited here. Now here there will be a uniform structure. So you can write structure, unified structure. In case of cooperative banks, there is a 3-tiered structure. So 3 tiers are there. So we need to see what are the tier 1, tier 2, tier 3. So what is tier 1? Tier 1 is at the state level. Okay. So state level you can write SCB, State Cooperative Bank. Tier 1, State Cooperative Bank. Tier 2. So that is a district level. District level. So district or bracket district or central cooperative bank. District or Central Cooperative Bank, CCB. SCB, CCB. Third one. So state level done, district level done, now village level. Village level. And there you write PACS, Primary Agricultural Credit Society. Primary Agricultural Credit Society. So I have told you about Agricultural Credit Society before, and I have told you there is something related to agriculture and something related to pure banking. So we are concerned about more that banking part. Okay. Primary Agricultural Credit Society. So what I am saying is this 3 level, district level, state level and village level. See, a state, central, if you see, it is not at the central level. Central means it is between village and state. That means at the district level. So don't have any confusion that central level means at the national level. That's not the case here. Okay. Any doubts in this comparison? The commercial bank and cooperative bank? Okay. So when we talk about cooperative banks, the structure is like this. So I've told you already the tier 1, tier 2, tier 3 structure. Apart from that, in rural and urban. Rural, urban. So we will be discussing more about rural only. Okay, so rural, there are short-term credit and long-term credit societies. Okay, so here related to short-term, that is, and here it is 3-tier. We have discussed already the 3-tier structure: state level, SCB, CCB, and the PACS, right? PACS. So this 3-tier structure we have discussed. Long-term credit, so short-term credit is related to agriculture, seed, etc. Right? Short-term. So short-term, which is written already. Long-term, here LDBs, land development banks. You can write there in bracket land development banks, for example. So they will take care of irrigation project like tube wells, etc. That is long-term. Okay, so you can write there irrigation project example. Irrigation project, etc. Tube wells, etc. So here seeds, etc. Okay, so irrigation project, etc. So here there is a 2-tier structure. There will be district level and state level. Okay, so there is no village level in case of long-term credit. Short-term credit, the 3-tier. So whenever we discuss about cooperative bank, we basically refer to this part. Automatically when we talk about cooperative bank, we refer to this part. Now when we discuss about urban, the examples are like UCB, urban cooperative banks. So this is similar to commercial banks, except that registration and management. Registration here is done under the State Cooperative Act, and the management is the representation. On the other hand, it is commercial banks registered under RBI Act, and management is by Board of Control. Otherwise, everything is similar to commercial bank. It is functioning. So when we talk about cooperative bank, we basically talk about this part, the short-term credit, that aspect. Okay. Write few advantages. Advantages of cooperative banks. They caters to financial needs of most vulnerable sections of society. They caters to financial needs of most vulnerable sections of society. Second, these are organized on democratic lines. These are organized on democratic lines. That is, their management is elected by the people. That is, their management is elected by the people. Third, they have area-specific approach, like rural, urban, etc. Commercial bank, that's not the case. Okay, they have area-specific approach. Next, these are associated with non-credit activities. These are associated with non-credit activities like provision of seeds, fertilizers, etc. to farmers on credit. Provision of seeds, fertilizers, etc. to farmers on credit. See, now the main problem with cooperative banks is less recovery, right? So it is actually a burden for the state, and most of the cooperative societies are actually under laws. So the most important reason is the management is elected from the members, right? So less professional management. You can write there, most of the cooperative societies are in laws. and it's a burden for the state. Main problem is less professional management. And again, politicization is a big problem here. Politicization. Okay. And the performance of cooperative banks is not satisfactory. Even the chairman is also elected by the people. There is a party line, right? This election is also conducted on the basis of party line. So obviously that lead to politicization. For example, those people who voted for this party, only the party will identify their people and will lend to their people. So the other party members will suffer. That's what I mean by politicization. And less professional management. So even you start lending to everybody if the members are if somebody is coming for loan from your party. So these are the main problems with the cooperatives. Not cooperatives, cooperative banks. Okay. Next is regional rural banks. That we will do tomorrow. Regional RRBs. We will do this tomorrow. So have an idea what is commercial bank, what is cooperative bank. You make a clear clarity with respect to their differences. Prelims, they used to ask this. Okay. Any doubts? Can we stop here?
Yes.
Yeah.
Sir.
Okay.
Okay.